Have you ever wanted to invest but felt overwhelmed by all the options and risks? What if I told you there's a simple, low cost, and proven way to grow your money, even if you're just getting started? That's what index funds are all about. Index funds are one of the most beginner friendly investments you can make. In fact, some of the most successful investors in the world, including Warren Buffett, recommend them as the best place for most people to put their money. But what exactly are they and how do they work? An index fund is basically a basket of stocks that aims to mirror the performance of a specific market index. Let's say you want to invest in the biggest companies in America. Instead of buying Apple, Amazon, Google, and 497 others individually, you could invest in an S&P 500 index fund and instantly own a piece of all of them. One investment, instant diversification. And that's the beauty of index funds. They spread your money across many companies at once. So even if a few companies perform poorly, others can balance it out. This makes index funds less risky than putting all your money into one or two individual stocks. But how do you make money with index funds? There are two main ways. First, as the value of the companies in the index grows, the value of your investment increases. That's called capital appreciation. Second, many companies in the index pay dividends, a portion of their profits, and you receive a share of that money. Some index funds reinvest that automatically, helping your investment grow even faster. One of the best parts of index funds is that they're passive. That means they aren't trying to beat the market, just match it. And because there's no high paid fund manager making risky bets, the fees are much lower. That may not sound like a big deal, but over 20 or 30 years, those small savings and fees can add up to thousands of extra dollars in your pocket. So, how can you start investing in index funds? First, you'll need to open a brokerage account. There are many options, like Vanguard, Fidelity, Schwab, or apps like Robinhood. Make sure the platform you choose lets you invest in index funds and has low or no trading fees. Next, choose the index fund that fits your goals. For example, if you want broad exposure to the US stock market, the S&P 500 Index Fund is a great place to start. Funds like VOO or SPY track that index. If you want to own even more, like including small companies, a total stock market fund like VTI might be better. Want to invest outside the US? Consider an international index fund like VXUS. You don't need thousands of dollars to begin. Many brokers offer fractional shares, so you can start with as little as $5 or $10. The most important thing is to start. From there, invest consistently, maybe every week or month, and let your money grow over time. Now, let's talk about some mistakes to avoid. First, don't try to time the market. Buying low and selling high sounds great in theory, but it rarely works in practice. Instead, stay invested and focus on the long term. Time in the market beats timing the market. Second, don't invest money you might need soon. Index funds are long-term investments. If you'll need the money in a year or two, it's better to keep it in savings. Third, don't get distracted by the latest trends or hot stocks. Stick to broad index funds that cover entire markets. They may not be exciting, but they're reliable and low risk. So, how much can you expect to earn with index funds? Historically, the S&P 500 has returned about 7 to 10% per year after inflation. That might not sound like a lot, but with compound interest, it can turn small investments into large sums. For example, investing $200 a month for 30 years at an 8% return could grow into over $270,000. That's the power of consistency and patience. Index funds aren't a get-rich-quick scheme, but they're one of the smartest and simplest paths to building long-term wealth. You don't need to constantly check the stock market or guess which stock will take off next. Just invest regularly in a diversified fund and let time do the heavy lifting. If you're just getting started with investing, index funds can be your best friend. Low fees, low stress, and long-term growth.